Good morning, everybody. Well, we got our consolidation day yesterday. That's what we anticipated yesterday morning. Markets didn't go very far, but they're continuing, as you can see, to move ahead up into the void above. It's a lot of days with higher high bars. Well, that one didn't make a higher high bar yesterday. Maybe slightly it did. So now we've got a bottoming tail bar on the S&P futures here that formed yesterday. And as it keeps going up until it doesn't, keep tracking a prior day's low as our first reference point of support. Obviously, that didn't break yesterday. It didn't get very far. And now you can see things are moving up. And it's 39.50. Could be an upside target. The SPX, there's a large open interest. If calls up there, should act as resistance. And, just looking at what's happened here this morning, this little breakout, I would be watching this closely. And this contract, notorious for doing something like this in the morning and coming right back in, set an alert below these lows. That would set up a breakout failure on a short-term basis. Now, as prices move up like this, we mentioned this, prior to this pullback that happened on the GME news and the shorts covering the squeeze, that any pullback would be contained. Relatively speaking, you wouldn't get a major collapse because so much support, being there to the left. Let's just scale that. Multiple, price points, pivots along the way. So on an intraday basis, we've got a similar situation because this is what we call a self-correcting uptrend. So even though if this was to turn out to be a breakout failure, which would be a shock pattern, the downside would be limited, relatively speaking, because the next reference point of pivots is not that far off. But as an intraday trader, you might be able to scalp something out of that. And you can see on the 5-minute how it popped up there. So creates the void. Now, longs that bought, buy stops hit that. At this point, traders are just waiting to see, can it hold or not? Because there's no significant support below. And Qs, just grinding higher. You see the bars, the candles here, relatively equal in range. Starts where the other one ended, and the same kind of self-correcting type of uptrend on the longer-term intraday chart. Same spike. I assume there was news, and it's logically speaking, waiting for some kind of turn day. That's what I spoke about yesterday. And we got a slowing in momentum and candle bodies, narrow candle body, the open and close next to each other in relatively narrow range, and are just running in place kind of day. It does not break a prior day's low. So no type of correction going on other than momentum slowing down. Glenn's asking me about SPX levels as he does 3 times a week. I appreciate that, Glenn. I think it's going to be kind of tough, meaning, the higher open interests are like at 39.50 and 38.50, looking at SPX. And so there isn't a lot of premium that far away, maybe 38.50, but, just because prices have moved up as much as they have, the other side of 39.50, there isn't much juice there. Now, maybe there will be by 10 o'clock if things keep going, but that potential for a breakout failure is there that we just looked at. So 39.50s. Trading. Well, not too bad. You can go 39.55 just to get above it. I think that would be safe. And the downside, I'm not sure if the downside starts. There's nothing below here, so you'll have to decide on that. I think selling the call spread makes more sense considering prices have been up so many days in a row. I'm not sure I have internals here. I had a major, wow, you say when it comes in threes, I hope my threes are there. I had to move to a different system and trying to get that arranged. And then yesterday, the computer I connected everything to just had a catastrophic heart attack. And when I have reinstalling Windows, you know what that's like. So I have to find that chart. It's somewhere underneath here, but I suspect the internals are about where they were, give or take. Breath had gotten to a bullish extreme last week, and it's come up since then. And sentiment's just been up there. So I'm just guessing here because I don't think I can find the chart right now. I have to find it or make a new one. It's under here somewhere. Anyway, expectation is for a pullback at some point. What's going to ignite it? I have no idea. But just historically speaking, this many days in a row, you can see the momentum stalled. Yesterday turned out to be, as I explained pre-market, what was likely to happen. It is what happened. Things are up here this morning. It's defying gravity. What more can you say? At some point it's going to pull back, and so risk for longs is increasing. As I quoted there in YouTube, I said risk for being long grows, but who cares? Right? That's the way this acts. Who cares? It's like market will go up forever. Remember, real estate some years ago. Leverage another one. It'll go up forever until it doesn't. YM. Right, it's reaching there as the bottoming tail buyer showed up on the dip again. And what's going to stop it from going up? Well, I don't know. I just moving the red line up to put it out of the way because there's just nothing there. So it really isn't meaningful that the red band is up there, but you can see the same type of initial breakout, which when I see this kind of a pattern going sideways like that and the breakout bar ends with a mid to minor topping tail bar, that puts my antennas up because this was a resting period. It was a red bar ignored. And so after this length of time going sideways and it breaks out, why did it stall all of a sudden? So it's a little suspicious. That being said, it's got to break below the low to get any, type of start of a bearish implication. At what hour is the weekly lecture, please? MT Live is today at 12 noon Eastern. Be live on YouTube. When Dan speaks, I'll get the link if you want to log into the chat room, and I'll drop it in YouTube. Yeah, awesome, Joel. There's a lot of broad strokes to what we teach, so to speak, meaning, hey, this is how we define an uptrend, a downtrend, a sideways trend, the support resistance. And then there's a lot of little nuances like that topping tail after a breakout that, it's like, that shouldn't happen. And a lot of times it does lead to a breakout failure. So these little things can be helpful, and especially to an intraday trader. You have to process that information relatively quickly, but with experience, these things come like everything else does. It starts to become second nature. All right. Russell has just been relentless. There's the wide range bar I pointed out to yesterday, or the day before, that typically ends a move or at least leads to some type of consolidation or slowing momentum. Clearly, the momentum stalled yesterday, but it still goes up by the dip. Bonds are up here a little bit, stabilizing, still have not reached the targeted area, but getting close. Down here. Good morning, Tim. They're on YouTube. Momentum. Look, let's see. Things catch your eye, right? Breakout sideways and coming back in again. It could, right, recover from this. But why? Right? You just, when I say why, it's not like, okay, we're going to have an answer as to the why. The why is think, why after a consolidation in a wide range bar, prices coming in immediately. And you can see the way oil's coming down here. Not a big deal on the daily chart, of course, in the weekly. And the weekly's up in this resistance area, but obviously a rejection of this area. And whereas you get a move down and up and a, what we call a downside shakeout and bullish price action at resistance, and it breaks out, it's coming in right away. Right? Things are becoming a little bearish on a short-term basis. Right. Gold now coming up into a significant resistance area, but continues to improve the weekly time frame. Let's see where this ends, the end of the week. We had the big red bar last week, and if we're getting a red bar ignored above or in the area of a prior breakdown failure and pivot low, that means to me little bullish price action here and get long gold, which probably happens toward the end of the week or the beginning of next week. And silver, yesterday I said, this looked pretty decent to go higher. And it kind of backed off right away. And so maybe it's waiting for gold to play a little catch up. I don't know, just got a little messy there. And we always look at the transports, which miraculous recovery. That short squeeze thing. What BS, just kind of threw a wrench in in a market that has been kind of erratic and choppy. You see, breaking down like this and coming all the way back up again. Not a pleasant or easy market, or probably patterns like this are just probably best left alone and looking for the stronger things to trade, rather than overlapping bars and bottom of the range, top of the range kind of craziness. Okay. Tony, I mentioned the internals, just checking the questions here. All right, all yours, Dan.
Yeah, I like your description, defying gravity.
Yeah.
Remember I said yesterday, I'm kind of getting complacent too in terms of the bullishness. Every day I wake up and I'm like, yeah, of course the market's going to be up 100. Why not? It's a printing press. Everything's just going up, up, up. But, it is. We had a tiny little sell-off into the close yesterday. And, I was saying you could trim some longs because we're very long oriented right now. And we're going to continue to trade the strength, but with an eye on the exit door, as we say. Hey, Sam, your drop down. Sam's asking about ENVB. It's gapping from a bottoming pattern. So I'd say 30-minute high. I mean, keep in mind you're playing with junk, so I don't expect a big target. Snow, yeah, I have snow here on my watch list. We were watching it yesterday and then it retraced into the close, so we held off, but over yesterday's high, you can sell a put spread and also, directional looks fine also. John Van Tuin, your drop down. It's freaking Zoom, man. So annoying. John's asking about Baba. Yeah, it's gapping up. We have an open put spread. Yeah, yeah, over 270 is fine. I mean, maybe even 30-minute high with the bias that it might go through that. Sandal, yeah, that was another. Marijuana stocks are just ripping here again. And yeah, I said yesterday that for a new trade, I like this one the best. I didn't trigger it, but I gave it to the green room. That was the best new marijuana stock I liked. We're in like 5 of them already, 5 or 6. Look at this, talking about gravity. This gapping up $10. So these pot stocks are on my bear call credit spread list. I mean, not yet until we get a reversal, but look at the volume yesterday. They got a contract with UK, I guess. For $20 gap. Yeah, thanks, TJ. Wow. $20 gap. You aren't kidding. My gosh. You know what this reminds me of is when Tilray was 150 bucks and it gapped up to well, no, it gapped to 150. Yeah, I can't go back far enough. I'm not going to waste time. But I remember it. No, yeah, it gapped. It was a big gap, like 50 bucks or something, like something big. It gapped to 150 and then ran to 300, and that was the high. So yeah, we have a few covered calls in the sector, and unfortunately, these short calls are capping our gains now. But we did them yesterday into strength, and what can I say? These things are ripping. Well, at least Kern, we're short the $10. Let's see, YouTube, Oxy, Oracle, Momo, Oxy. It's an inside bar, but over the high. Momo, there we can find better. I don't like the gap and crap. I like buy setups that come in a controlled manner. Zoom. Yeah, we're in it. We're in a put spread, and I was watching that as a directional also, but I wanted to wait till the afternoon, and I was at lunch right here coming back, and boom, or maybe I was back because that's 2:30, but it just ripped when I had my head turned. Now, you just got to see how it sets up. Oracle had earnings. Wait, did Oracle have earnings? Somebody's asking me about. Thomas is asking about Oracle. Stavros, yeah. Well, we don't know if it's an exhaustion gap until kind of after the fact. And exhaustion gaps, I actually like more than 3 bars up. So are these exhaustion gaps in these pot stocks? I don't know. I mean, they're getting far from the 20 and have run a lot. AHPI. I don't like the way it trades. It is gapping up. I got no interest in the way that trades. ASMB for Norbert. Same. It's up. It's no. I got zero interest in this, Norbert. It's up multiple bars, topping tail, gapping to yesterday's high. It's just I got no interest in it. It's not a good setup. But I did post a number of gap and crap candidates. Now this one's, look, it's gapping $30. 30 bucks, and it's climactic on the weekly. But believe it or not, it's holding like a tank pre-market. So I don't know yet. You know, they're just watches. GSET, um, you know, you missed your entry. Thing went from 120 to $3. What do you want me to do with that? PDD 196. Nah, I got no interest. Just gapping to Monday's ugly bar. Jake, I did not. What, Jake? You again? You've heard me say this. You have to help me help you. So on these things that are just blasted, you need to ask me a question, or else you know my answer. Okay, but I'm busy here looking for new stuff. So, you know, just looking at something that's blasted with no opportunity is not the best use of time right now. Fiverr is a bearish candidate. I would say no, Mark. That's a controlled 100% retracement. There's absolutely zero signs of reversing right now. So I don't know about that one. Let's see, ACIC, gap's too big. But look at the 15-minute chart. That is incredibly bullish. That's a controlled buy setup. Now, if this identical setup was down more, like around, you know, 12 bucks here, then it would be a tier one day trade. That's beautiful pre-market. It's just so far from support is all. Matul, you know the first question I'm going to ask you. What type of trade is it to you? If it's a swing trade, I would just sell the gap. I'd sell the half. Okay, so if it's a core trade and you want to sit through earnings, then number one, you got to accept that risk. And number two, our general approach of sitting through earnings is selling a call to lower our cost basis because they're expensive calls. So that's my answer. If it's a core trade, and that's exactly what we did. We're in this too. We shorted the calls. Actually, we shorted the calls on this prior gap up. You know what I should have done was bought those calls back. So we're capping our gains. But if you're not in it, I would sell the $20 calls at the market open. Just wait for liquidity to, you know, tighten up. That's my answer to you. Let's see. Oh, junk. Stephanie Pomboy from Macro Mavens. I actually met her in Dallas. She's a very talented girl, kind of fundamental economics. And they bring her on CNBC pretty much that talk bearish stuff. And she was mentioning, yeah, the junk bonds. There was some mention in the Wall Street Journal that, you know, they call it the dash. What is it? Dash for junk, something like that. Junk. I don't know. They're chasing junk, and that's just another dash. There you go. Dash for trash. There you go. Thanks. I called it junk. Yeah, dash for trash. But it's just another example of the asinine. Well, asinine's not the right word. Of the nosebleed bullish sentiment that when people are chasing yield, they will pay or they'll pay a higher price, which is equivalent to a lower yield, right? For jump. So they're taking more risk for less money. That's exactly what that means. So yeah, I mean, look at J&K, it's the junk ETF, and it's, it's up here at nosebleed levels, which means yields are they're saying they went under 4%, which was pretty bad. She also made another interesting point, not that it is going to change my trading one iota, but she was saying that historically, and this kind of sounds like the Warren Buffett comment. She said historically the stock market should trade at 80% of GDP, and wherever we are now, I forget her number, but she did say to get it back to 80% of GDP, that would be a 55% pullback. Now, is that going to, put shock patterns in my trading and saying, oh my gosh, a crash is coming? Absolutely not. But I'm not going to change anything. My approach ain't going to change at all. But it does, from an economic standpoint, it's, saying, yeah, no, right. It's that's basic. Okay, well, that's a good point. That's a good point. And yeah, so the historic, I mean, the reason we have, oh, man, it was loud. The reason we have this bullishness is yeah, it's zero interest rates, which bids up asset prices. People are willing to pay more for them, and the money printing press. So yeah, I mean, all right. So McGraw, you asked me about open here for put spread. I'm sure. Go through the checklist. I had Coke here as a long watch, and it's coming in pretty hard, so I won't be in a rush for that. Ring, my ring up alarm went off. That looks fantastic. I'm going to tighten the stop now to here. 423.13. I mean, I hope you all set up and down alarms like I do, right? I wouldn't, I wouldn't have seen that unless the alarm just popped in my face. But we're very heavy on the long side.